The commodities market has been under heavy pressure over the last few years, but many have suggested that the pressure will not amount to a diamond anytime, with the status quo set to get worse before it drills to its best part. In its cover story this week, Finweek unpacks whether the possible reward of investing in the sector is worth the gamble. At the desk now is Bevan Jones. He's the CEO of Thebe Mining Incubator, and Paul Hansen, Director of Retail Investing at Stanlib. Everyone, welcome to the desk. Perhaps, Paul, let's start immediately with you and ask you to just give us the lay of the land. What are the key trends that are underpinning the decisions of whether to invest or not invest in commodities right now?
Yeah, sure. Well, it is a very uncertain area, as you say, and no one quite knows where it's going in terms of the demand-supply dynamic. But at the same time, one of the biggest trend that I see right now is that the four biggest economies in the world are in a synchronized upswing for the first time in a long time. So you're talking about the US, second biggest China, very importantly China for this one, and we had a good number this morning from China, and thirdly Japan, and fourthly Germany, and in fact the whole of Europe starting to swing up. So altogether I think they probably make up over 60% of the world's GDP. So, you know, although the US has maybe had a little bit of a setback because of the government being partly closed for the last couple of weeks, nevertheless I don't think it's going to upset this upswing, and that could, within 6 to 8 months, be quite important as far as commodities go.
Paul, can we actually use commodities as a proxy for the health of global economies at the moment? Because there seems to be a lot of stories doing the rounds in terms of synthetic products like ETFs and ETNs, and commodity bets being taken by a lot of the investment bankers who seem to drive prices, whether it's food prices, hard commodities, soft commodities. And is it a real proxy for what's happening in the global economy?
Well, Mark, I don't think it is, because of the huge increase in supply that's been coming out from the iron ore, the copper. In fact, this morning we saw Anglo come out with a big jump in copper production. And it's wonderful for Anglo to have that and for shareholders, but at the same time, you know, it's the issue about too much supply coming out. The boom has led to, and the high prices have led to a lot of supply coming out. So the big question is, you know, is there enough demand to meet it?
And how much of a factor is China playing all of this? Because obviously China was growing at a massive rate, and now there's a significant slowdown. So is that changing the whole balance of things in commodities?
Well, it's a huge factor because they buy 40% of the world's copper, I think even more of the world's iron ore. But, you know, 7.8% growth this morning, year on year, for a country, the second biggest economy in the world. You know, it's better than 10% growth 4 or 5 years ago because it's so much bigger today. So it's still a huge issue for sure, and it's a question of, you know, 47% of their GDP is currently going on capex, on infrastructural spend, and everyone says, well, they can't carry on, that's too high, it's got to come down. But that's where it is at the moment.
It seems as if the key theme that's coming from Paul's analysis is that the ground is fertile to be looking at commodities. And perhaps let's throw this to you, Bevan, and give a comparative analysis of how mining stocks are faring against, say, pharmaceuticals and technology stocks, which are also getting quite a lot of attention at this time. Comparatively, is it a good space to be in?
Well, mining stocks have obviously been hammered of late. So if you're a value investor, then yes, you'd probably be looking quite closely at mining stocks. But they are going to be cyclical, and I guess your other sectors have their cyclicality as well. It's probably a good time to get into certain mining stocks. You know, you're just talking about China now. The recent expansion has been on the back of the last sort of 5-year plan. Now sort of steel traders are looking to the Chinese government in December now to come up with the new expansion plan, and is that going to be as robust as the previous one? We don't know. So the curve is somewhat backwardated in things like iron ore. Supply is obviously the big factor. Everyone's expecting, you know, West Africa, iron ore, etc., to really increase substantially. So there's a multitude of factors, and you have to do your homework, and you have to pick your sectors, I think.
Yeah, I mean, one thing I've noticed is there was a period where a lot of people were looking at the commodities themselves, not taking the company risk, but buying the commodities. Now suddenly you're seeing a lot of these big name CEOs leaving corporates and going and following the private equity route into specific projects or specific businesses. Is the shift back into the individual business? So
it's the Ivan Glasenberg Glencore model, right? When the sector's in distress, you come in and you scoop up all the fragmented players who are not making any money, you hold back supply, and you wait for the cycle to come back up, and then obviously the cycle peaks, and then everybody climbs in, and then the prices come down again. So those are the mini cycles that you have within the larger I don't really believe in the super cycle, but I think you've really got to differentiate. You've got mining stocks, but when we talk about commodities, we're also talking about food, and that is getting. I mean, ask anybody who shops nowadays. That is getting more and more expensive. The soils are getting more and more difficult to produce these things. The chemicals are killing our soils, making it harder and harder to farm. So we've got to come up with new ways to look at those sorts of commodities. Otherwise, we are looking at food prices just escalating out of control. And if you want to be an investor, that's a good bandwagon to jump on.
Bevan has alluded to certain stocks as being attractive. Paul, can you give us a little bit more detail in terms of, when we talk about commodities, are there certain commodities that are perhaps overlooked and that could potentially have higher yields than the traditional ones?
Well, not for institutional investors, for big investors. I think you have to stick to your bulletin. Some people like Anglo at this price. Some people like the platinums, Anglo Platinum, Impala Platinum, and then the iron ore players. I mean, Kumba had a big knock this morning because they come out with a disappointing production report, way down. So I think it's those names that the bigger investors have to stick to from a point of view of ability to buy and sell those shares. And of course, some of them are big global shares, with Bulletin being the biggest of the lot. So it's very hard to delve much further below that because of the lack of trading volume in those other shares.
As an institutional investor, though, you look at a lot of the labour issues that are plaguing South African specific stocks at the moment, and I'm sure there are issues broader than South Africa, but at the moment there's a lot of bad news around the platinum mining, labour issues, gold. What's your take in terms of risk premium being attached to those shares at the moment?
Yeah, it's huge. I think foreigners are scared of coming in here because of that very reason, because it's always in the news, always in the headlines. So it's the big problem with South Africa at the moment. It seems to be the only country where lots of mining strikes are happening sort of all the time.
And that's where you get your difference between investing in a share like Impala Platinum and investing in a platinum ETF like ABSA's platinum ETF. So obviously you have a strike, the platinum price is going to go up, the ETF is going to benefit, but Impala is going to suffer. So that's really why you've seen a whole scale move into these ETFs and these products. So obviously I track more the underlying markets themselves. I don't really look at the shares, but as you say, I mean, if you want to cover everything, you've got to go for a BHP Bulletin, etc. I remember when Brian Gilbertson was still running Bulletin, he said mining is one thing, but a utility is the next step up. So something like an Eskom or something, that trades at like 2 or 3 times the size of a mining company. But if you really want to go for the big markets, then you go for an oil major. But the problem is, we've got to upgrade our refineries now in South Africa, and there's huge capital in terms that has to be spent. So all these companies that require huge capital are under heavy pressure. I think what you're seeing is the Chinese are playing a very selective game. The Chinese are coming into small-scale operations throughout Africa. They're investing in the local operations. They're investing in the supply chains. They're building out the infrastructure required to get it to the ports, and they're consolidating in a much more organic fashion, rather than going in for big investments at the top level. And that's where they're picking up value, because that's where you ride the resource curve up from virtually nothing through to pre-feasibility, through to ultimate value creation on the production side. Well,
you mentioned Brian Gilbertson, so you've obviously seen a vehicle like Pallinghurst, for instance. Obviously, it's been talked about a lot in the press because of the Brian Gilbertson factor. There appear to be more and more of these type of businesses, smaller investment holding companies, floating around the outskirts of exchanges. Is that something that's attractive to you as an investor?
Well, we're seeing a lot of private equity flows into the sector at the moment. People are smelling the distress in the market. There's blood on the streets, and they're trying to pick up those fragments, and then ultimately, Mick Davis, X2 Resources, Xstrata 2 is sniffing for those quality assets, but at the same time that have maybe been beaten down by the market. And these are not assets that are listed. I mean, these are small operations that your Glencores, etc., will come and pick up because they know what's going on. Your average investor doesn't know about all the small operations that are throughout Africa. So, of course, you've got to have a team on the ground. You've got to have your originators. And then you've got to strike those deals at a very low price. And unfortunately, in order to grow those companies, those guys need money. They need money to do their pre-feasibility studies, their drilling programs, etc. And that's where private equity is coming in. They're prepared to take that risk of failure. The project might not work, but then ultimately the returns are there to justify.
Let's perhaps look at an internal focus, and I'm coming to you, Paul. How important is it to see that within a mining company that the management is showing its confidence in the company through a significant shareholder status?
Well, yeah, it's unusual in the mining space to see that. It's I think it's the Glencore. The CEO has 25%, the ex-South African, who's the CEO of Glencore. But for the rest, they're relatively small. I think your article, Finweek article, mentions less than 1% for the other companies, Anglo, Billiton, you name it. So
3%, I think.
Yeah, exactly.
So, but what does that say about their confidence in performance?
No, I think those companies are so big that it's hard for anyone to acquire much of a percentage of a company the size of Billiton or Glencore. So the incentives are important because that's how they're going to drive it from there. So the management's very important, key, crucial stuff.
Maybe, Paul, one other question. I mean, we were joking about it off air a little bit. Everybody seems to follow the gold price religiously in South Africa in terms of, it's up 2% today, it's down $20 tomorrow. When you look at commodities, what do you actually look at to tell you the health of an economy in general, or global economy?
Yeah.
What commodities interest you from that perspective?
Well, I think iron ore, is the most profitable of the lot at the moment for the big companies, and the profit margins are the highest. So that's the first one we would look at. It goes into the making of steel. So how's the steel manufacturing going on around the world at the moment? Iron ore, number one. Number two, second most profitable. Apart from oil, of course, you've got oil as a big factor for a company like Billiton and for Sasol, but then you've got copper as the next most profitable. So then the rest fall down the curve there, from coal, from diamonds, you name it. But certainly iron ore and copper are the two most important, along with oil.
And are there any commodities that people don't really know or talk about that are maybe set to boon and increase in price, and we should be watching out for them? Or you mentioned vanadium.
So yeah, we were chatting earlier, and I mean they've just had LME week in London, and they've downgraded copper as they're a lot more bearish on copper because of the oversupply situation, and they've just gone to tin and lead, surprisingly. Okay. So tin's making a bit of a comeback apparently, but other sort of esoteric things like vanadium. I mean, vanadium is going to be used in powering batteries for off-grid supply. I mean, that's the holy grail of off-grid electricity generation. You can't store electricity, so you have to have batteries, etc. And that's the Chinese are all over Africa looking for vanadium opportunities at the moment. Mm. But those things are not traded. I mean, that's where you have to have the, as I say, the people on the ground. You have to know what's going on. Yeah.
Mm. And when they look at these various African countries again, is it on the back of big infrastructure rollout projects that we're seeing that investors are likely to follow that trend and then follow through with their funds?
Yeah. So the problem with offshore funding is that they obviously want the material to end up in a port so that they can take it. So they typically do offtake financing, prepayment financing on the back end. So it's not debt or equity financing, it's project financing. And if they need to build the infrastructure, they will. So the Brazilians, Vale in Mozambique with the coal projects, they're building a rail run to Nacala port in Mozambique. The Chinese are building on the Tazara rail line in Tanzania to get the copper out of the copper belt, etc. So they are throwing money into infrastructure, and infrastructure and these mining opportunities are going hand in hand. Unfortunately, in South Africa, it's all government controlled through Transnet. So you really are relying on Transnet to step up that investment to get more coal out, or to get more iron ore out, or to get manganese out of Port Elizabeth, etc.
In terms of prospects, maybe, Paul, for mining stocks looking forward, we know that we've said that they've taken quite a bit of a hammering. What triggers would need to be levered for them to turn the corner and begin to offer those positive yields?
I think you need to, if the global economy continues to pick up with the biggest economies, and then hopefully the emerging markets follow as well, then like Brazil, India, Russia, etc., then you should see demand picking up quite nicely. Well, that would be the next step, is to see demand picking up quite nicely. And if demand exceeds the supply coming out at that time, then the prices will go up. At the moment, we've got a very weak dollar. We've got almost $1.37 to the euro. It's the weakest in about 9 months. And that's actually good for commodity prices because they're all priced in dollars. And so you find that if the dollar's weaker, the commodity prices have a tendency to pick up a bit. And we've seen platinum pick up in the last couple of days, I think, on that. Gold a bit too. So, that's something one watches quite closely. And, Yeah, I think those are the crucial ones.
And you'll see the Chinese are putting a lot of pressure on the US in terms of all their treasury bonds, etc., are in dollars. So I think there's, this has been around before about what's the world's reserve currency. And obviously a weaker dollar means higher commodity prices, a stronger dollar means lower commodity prices. So if we see the Chinese starting to exert some pressures there and we see some currency instability, then gold is a natural hedge. I mean, gold doesn't trade on supply and demand. I mean, let's face it, there's more gold above the ground than there is under the ground. So gold trades on interest rates. So you have foreign exchange and interest rate trading, which is huge, and then the interest rate traders use gold as an interest rate proxy. That's simply what they're doing in London.
And perhaps just come back to the South African landscape. Interestingly, you hold an interesting title, CEO of Thebe Mining Incubator. What exactly are you incubating, and what are you hoping to get out?
So the Incubator is a non-profit entity that Thebe Investment Corporation has set up. And effectively what it is we are going to be using some innovative financing mechanisms, etc., where we look at sort of the development funding and invest in those early stage resource opportunities. So your average BE entrepreneur doesn't have the capital, as I said earlier, to do a drilling program, to prove the resources that he has in the ground. So he can come to us and he can say, okay, well, I want to join onto your program. We can help fund him through the various mechanisms, and we'll take him up the value curve. So now he can get to a bankable feasibility stage, and now banks and private equity will want to talk to him because he's now proved value. But then we have we add on a coal, for instance, a coal fund or a platinum fund onto that, and we can then take them into a specific fund, a vehicle which we've already created. The point is that he doesn't lose his birthright. We keep that black mining entrepreneur invested in his project throughout the chain.
Right.
We just help him along the curve. So the incubator doesn't necessarily make money itself, but it provides a platform for something like the coal fund or a platinum fund or a food fund to take over, and those would be for-profit entities. And it's ultimately trying to help with transformation in the sector. The Thebe Foundation gets involved on a community level to map the community to the mining entrepreneur, so you don't have a Americana type situation. So we've thought this through quite a lot, and we think we've got a solution, and hopefully we'll be developing those coal mines that Eskom, they need 80 billion rand of development to bring new coal mines on in the next 8 years.
And in terms of the trends that have come out from the entrepreneurs that have come forth, where are you seeing their most appetite towards which commodities? Well,
in South Africa, obviously the hot topic is coal, because coal's also easy. It's easy to get into. You've got a ready buyer in the sake of Eskom. Eskom on a rand per gigajoule basis, Eskom is actually paying quite attractive rates. You don't have to worry about railing it out of the country. You don't have to worry about getting port access, etc., and getting an offtake deal. So that's a very attractive situation, and we really think we've got a solution for Eskom in consolidating a lot of the guys in the space.
Just on that, isn't coal somewhat short-sighted, because eventually we're going to have to move to a certain percentage of renewable energies and that sort of thing?
But I mean, if you think about what's happened in Germany, where the renewable energy has just exploded, the German power grid has actually become unstable, because the power prices dropped so low now that the coal producers and the gas producers are not making any money. And now baseload, you have to have baseload generation. Renewable energy is peak load. So it helps when you've got peaks, etc. But now they want to switch off their coal plants and their gas plants in Germany, and the German government is saying, but hold on, you can't do that because the whole grid will collapse.
Right.
So yes, it is. You look at someone like Exxaro, which has a very, they're quite well hedged. They have coal and they're developing a renewable energy business. That's a great business to get into.